Hi everyone, Maria Tyler here. In this short video, I'm going to focus on contribution margins in relation to your assessment. So please make sure that you've read the study guide where it talks about contribution margins, because that explains the background in detail that you'll need to know before you watch this short video. So contribution margins, to calculate them, essentially they're part of cost volume profit analysis, and they're most useful as part of break-even formulas and so forth. But essentially the mathematical equation is selling price minus variable costs equals a contribution margin. Now you can do this as total, so you can have a total selling price minus total variable costs. That will give you a total contribution margin, or you can do it per unit. So in other words, divide totals by the quantity. So selling price per unit minus variable cost per unit equals contribution margin per unit. And that's essentially what we're going to be focusing on with our assignment on a per unit basis. So we know the formula. It essentially it tells us what each unit contributes towards generating profit, well, hopefully profit, but at least covering our fixed costs. So that's why it's called a contribution margin. It's the margin of the sales price of each unit that contributes towards covering fixed costs and hopefully profit as well. If the contribution margin just covers fixed costs, then you're just breaking even. So the break-even formula, which I've listed down here, Maria's formula, it's not my formula. The acronym is my formula. I put acronyms on everything. So the break-even formula just shows you that if you're just covering your fixed costs, you're not generating any profit, you're just breaking even. So hopefully our contribution margins will be positive, i.e. they're contributing towards more than just fixed costs. They're also contributing towards a profit. It varies directly as a fixed percentage with sales volume. Obviously, mathematically they're related. And emphasizing the contribution margin does make your financial statements more useful for decision making. So we can actually restate a financial statement if we have the appropriate information. We can restate it in terms of contribution margins. So we can have our sales less our variable costs equals a contribution margin, then minus all other fixed expenses, and hopefully there's left over for a profit. If you are interested in pursuing cost volume profit analysis, and it's fairly interesting, and I think it's a little bit enjoyable to do as well. I work with a lot of clients in practice when they're opening new shops or doing what we call what if, or sensitivity analysis, so forecasting for the future, and we use contribution margin, the break-even formula, quite a bit. So this is where I've actually come up with my acronym. So I go in, I type my B equals FC on CM, and they can remember that, my clients can remember that without me having to be there. So the contribution margin approach is generally worked around this break-even formula, and there's a very simple example that I've put here. So break-even sales in units, basically our fixed costs. In this case, let's just assume our fixed costs for the year, whatever overheads we have, amounts to $150,000, and we've already calculated our contribution margin to be $15, which is our sales price minus the variable cost. So this is our contribution margin down here. So the break-even number that we need to sell in order to cover our fixed costs is 10,000 units. That's a very, very brief example. Now, for your assignments, you don't have to go through to that level of detail. You just have to show us your understanding of contribution margin, and that's pretty much what we're looking for. We want to see your understanding what a contribution margin means to you. So you need to, for your company, you have to think about your company a little bit, and then what sort of products do they have, and then estimate a sales price and a contribution and a variable cost for each of those products, and then calculate the contribution margin and explain it back. So I'm going to go through my example now. My company that I use for all of these videos is Wesfarmers. And Wesfarmers has a number of companies that it owns. It has a number of subsidiaries, and collectively they produce many products and services. So I only have to choose 3 this term, okay? Now, I'm going to go with their Officeworks company for a couple of reasons. Firstly, I love stationery. So I like office supplies and all that. I always have, even as a little girl. So it's a bit close to my heart. So I'm going to choose Officeworks. And I can also really show off my knowledge with contribution margins here, because large retail stores like Officeworks use contribution margin for strategic placement of their products. So
I'm going to choose 3 items that are sold in their Officeworks stores. And for ideas, I can check out their website. So I go into their website and I choose and put some pictures in my Word document. They have so many products. So choosing these was a little bit interesting. But I like pens. So I chose an Artline assorted 4-pack of pens as one of their products. And I can write a little bit about that, put some photos in. I'm going to choose a Casio 12-digit heavy-duty calculator because I do a lot of, calculating when I'm doing my accounting work, and a Matrix Stand Desk White because I actually have used one of these in the past as a standing desk, and I'm using a standing desk now. So again, close to my heart. So they're the 3 products I'm going to choose, and I'll write a little bit about them in my Word document. I could also put some photos up, so I could go into the Officeworks site, have a look at all the different products. There's so many to choose from, so it really was hard for me to choose, but I chose the pens. So this is the pack of pens. So again, I could take a photo and write about why I chose the pens. So it's this one here, because that's actually available to add to my cart. The calculator one, I'll put a picture of the calculator, which is this first one here. So the Casio 12-digit heavy-duty desktop calculator. So I'm going to choose that one as my second product. And then the third one is going to be that Matrix Stand Desk large white one. So it's this one up here. So they're my 3 products that I've chosen. Okay. Now, I have to get figures for these products because I need to show my market that I know how to calculate a contribution margin. That's the next step. So I need a selling price to start with. I need to have a selling price, a variable cost, and then I can calculate the contribution margin. Now, I don't even have to guess their selling price. You might have to for your company. But in my case, Officeworks actually has their selling prices on their website in the online shop. So I can actually take these figures directly from their website. So you can see where I've got my costs from, and I could, again, screenshot that. So that the desk is $199, which I've put into my Word document here. For the stand desk, the calculator, going backwards, was $58.89. So again, put that in here. And, if I screenshotted these pictures, they would be in there anyway. But the 4-pack of my Artline assorted pens is $10. So again, pop that into my Word document as the selling price. I've got selling prices for 3 of my products. Now I have to move on. I need a variable cost for each of those products. Now, I will have to guess the variable costs as they won't usually have listed this anywhere individually on their site. Okay, this is part of what we call the management accounting information, which is internal. So you won't usually be privy to that sort of information unless you actually work for the company. And even then there's restrictions on what you're allowed to do and say with the information. So the short story is I don't have access to that information, but I need to use my knowledge and my experience to try and help me guesstimate an appropriate variable cost. So usually there are very small margins on high volume items. So I'm just going to guesstimate a 90% variable cost. All right. So to do that, I literally take the sales price, multiply it by 90% or 0.9 is the decimal version of it. And I'm left with a variable cost. That's my guesstimate. Okay. And that's all you have to do. Just write about why you're using that. This is my justification for using a 90%. It's a small margin, so the profit margin will be the difference. The contribution margin is the difference. So it'll be very small. They're all high volume items, being a large stationery shop. So that's my justification, and this is how I've calculated the variable cost. So $10 by 0.9, I've got a variable cost of $9. $58.89 multiplied by 90% is $53. That's rounded because it was 53.0001. So just round it. And the stand desk was $199 by 90%. So I'm left with a variable cost of $179.10. So now I just have to do some simple maths, okay, which is the contribution margin equals the sales price minus the variable costs. So literally for each item, I just take the sales price minus my variable cost, and I'm left with the contribution margin. Okay, so 3 different contribution margins. So that's as far as the calculating goes. That's how hard it is. Pretty easy. But don't forget the other bits, all right? There is a written component. So make sure that you are writing about, your contribution margin, because this is where you get to explain your knowledge behind what a contribution margin is. So you've now shown you can calculate it, chosen 3 products, you've now calculated your contribution margin. Now you have to do the rest. So discuss why the contribution margins for each of your firm's 3 products or services might differ or be similar. Why might your firm produce a range of products or services with different contribution margins? Why not only produce a product or service with the highest contribution margin? So you could talk about lots of different things there. For example, if I'm talking about my company, discuss why the contribution margins for each of your firm's 3 products might differ or be similar. There'll be different audiences that they are targeted at, so different products for different people. The different types of products, so people are interested in those products for different reasons. Why might your firm produce a range of products or services with different contribution margins? So again, the contribution margins showing my per unit cost details. Officeworks needs to make sure that they're providing a one-stop shop. So therefore they need to offer for sale a range of different products and services. They also offer services such as photocopying and other admin services. So they all have different contribution margins, and hopefully those differing contribution margins collectively serve the customer's best needs coming into their shops. Why not only produce a product or service with the highest contribution margin? Again, fitting in with the company's goals of being that one-stop shop. You need to offer a range so that you are attracting customers in, so that they are not going to several different little places. They come to your shop because you're actually offering such broad ranges of products and services. So you might have to offer products with lower contribution margins as well as the ones that make you money in order to get customers to come in to buy those high margin items. So things like that. There's so many other things you could talk, and we want you to do a bit of research about what a contribution margin is. When you usually do a general Google search, Google comes up with things like the difference between a gross margin and a contribution margin, with, the gross margin being looking at a business from the whole, taking into account all of its products and operations, which it does, whereas contribution margins look specifically per items, which is true. And contribution margin really focuses on the individual products and services, and so it gives you information about which ones you might like to display more prominently in shelves. And you'll notice always retailers, especially even like grocers like Woolworths and Coles, they are strategically placing products with higher contribution margins or more appeal at their checkouts. So as you're waiting, oh yeah, I might need this, even though you don't really need it. They strategically place products, and that's again to bring them in profits. So it's useful to know a contribution margin, again, for things like strategic placement of products. So all those sorts of things you can write about. And don't forget, there's also, you need to talk about constraints. So identify or guess one or more resource constraints your firm may face, and also perhaps any market constraints you feel may impinge on your firm. In what ways might these constraints be relevant when deciding whether or not and how much of the 3 products or services of your firm that you've identified should your firm produce and sell? A lot of the recent assignments that I've marked on this have given a good example of an general economic condition of Australia, because we've just sort of seen what's happened with the COVID-19 pandemic in Australia in 2020. It's 2021 now, but we saw that the general economic condition of Australia was very, very dependent on all of the different laws and regulations that came in place from that pandemic. So a lot of students did talk about that in their assignments. You can talk about any economic condition that affects your firm. In my case, obviously, Wesfarmers is an Australian company, so that would be something I would talk about, in amongst other economic conditions as well. So I could also talk about inventory levels being a constraint for my firm, storing inventory as well. That's a constraint. Storing them can often be quite a high cost. And I know our local Officeworks has a big, huge storage shed out the back, which is quite large, almost the same size as, not quite as big as, but almost the same size as the actual Officeworks store itself. And that's just for storing its inventory. So we'll talk about inventory levels and how that constrains the business, or managing inventory, how that constrains the business. Also talk about supply chain interactions. For example, the JB Burrows brand that they stock, or the Artline brand, such as the pens I'm buying. They might have mandates on recommended retail prices that they have to follow. So there's constraints there as to setting their prices. There could be competition from other stationery stores, local stores. That we have a lot of, pop-up school supply stores around the December, January, new school year period. I could talk about that, providing competition in there. So there's a number of constraints you can think of based on your knowledge of your firm that you can talk about in your assignment. Okay, so that's pretty much it. That's all you have to do in terms of the contribution margin step in your assignment. It isn't worth a huge amount of marks in comparison to the other steps of the assignment, but it is, it could be the difference between a grade level. So if you do it well, I think they're fairly easy marks to get. And you can have a bit of fun with this section as well. And, that's what it's all about. So I'll end on that note. Thanks for watching. Hope you have fun creating your example. And I'll see you for the next video.